Hello, Elevate Mastermind members. It is Monday, and are you ready to elevate? Here in Colorado, we are definitely hitting our stride with spring. It is gorgeous out there. Very, very good. I want to touch base today just about basic financial numbers or questions we should be able to answer. And I know these seem kind of basic, but sometimes if we don't pull ourselves out for a couple minutes here and just make sure we do have a grasp on these numbers, it just doesn't get done or addressed. So, number one, do you know how much revenue your business needs to produce to cover your overhead? Sometimes small business owners are very motivated by the number in their checking account or the amount of deposits they made for the week. But I tell you what, that's not the right number to be motivated by, because what you want to be motivated by is the number of people that start with you, right? Because I assume you know how much that client is worth, right? With our business hats on, the financial revenue that's going to come from giving your services to them. So that's your projection. Like, you have to have a certain amount of new clients to achieve your overhead, your revenue goal for that month. So this is assuming, one, you know what your overhead is. I'm a very big fan of putting overhead or including an overhead a couple different accounts. One is your business savings account. If you can put 10%, I mean, right off the top, I know you've heard this before, but are you doing it? If you could put 10% right off the top of every deposit you make, like let's say you put together all your deposits for the week, and this is what our total revenue was for the week. If you can take 10% off of that and put it into a business savings account and just don't think about it, get that baby up to $50,000, and then we can start talking about like corporate savings accounts and some possible money market or any kind of any kind of interest bearing accounts. But right now, just do that, forget about it. A lot of times that has saved me. When cash is tight, so glad I got that business savings account. Another big one is your business tax savings account, right? I mean, if you're like me, sometimes you get to the end of the year and you're like, how much do I owe? I did not plan that out well. But again, if you put 10%, I mean, that's kind of low, to be honest with you. I'd probably do more like 30% into your business tax savings account, assuming that's your only savings for business taxes. So you got 10% going right off the top to your long-term savings account. You got 30% going into your business tax savings account. And then from there, if you want to put together a little tithing fund or a community service fund for your business, that's nice too. And then you pay bills with everything else, but the number one person after that you got to pay is you. So that's a good formula just to kind of stay above the eight ball. You want to know what you're going for. Like, what is your future financial target? How many new clients do you need to reach that financial future target? And then, of course, you know how to make financial decisions off of your profit and loss statement and off of your balance sheet. I'm a big fan of these fractional CFOs that have really come on the market this past, so I'd say a few years for sure. But a lot of small businesses are hiring just a fractional CFO to look at their numbers every quarter, make sure that their budget versus actual is accurate. They're able to do their cash flow projections every couple weeks or every couple months, so you know about how much you can expect coming in and coming out. So remember, you're a business owner. You have a responsibility to be able to keep an eye on the numbers so that you can pay you, of course, but your team is counting on you to be able to be in control of this pillar of being a small business owner. All right, have a wonderful day. God bless. Keep smiling. Bye bye.